All right, gang. Welcome back to the live room. Can you guys hear me? Happy Wednesday to you. Let me know if you can hear my voice. Hopefully, apologies for being a little bit late. Kid had a last second meltdown. We're regressing. He's going from 7 years old back to 2 years old. So it's not a fun period. But hopefully, you guys can hear me. If you can't, just let me know and I'll push whatever needs to be pushed. But welcome back to the live trading room. Happy Wednesday to you. Today, we got some pretty light markets out there. It's we're really getting into the summer. The old saying goes, sell in May and go away. Summer, we typically start to see a little bit of a slower movement in the market. It doesn't necessarily mean negative movement in the market, but just a little bit slower. And looks like we're starting that right now. But for today's trade of the day, we are going to take a look at gold, and then we'll bounce around to wherever you guys want to bounce around. But there honestly is not a lot out there. All right, so you guys aren't hearing either, right? All right, that's what I was asking. No sound. Do you guys have any sound now? There we go. All right. Went on a whole 5-minute rant about stuff, but anyway, we'll forget that. We'll get started. We're talking about how there's not too much in the markets. Sell in May, go away. Kid having a tantrum right before the live room started. That's why I'm late. Let's just hop into things today. A little bit of rough move. Mood. We do have CPI coming out at 8:30, and the YouTube live stream isn't working. Doesn't look to be working. So looks like it's just one of those days, guys. One of those days. CPI coming out at 8:30. That's the major news event that we need to pay attention to today. We're going to make our trade of the day here on gold. It's really the only thing in the market that looked appetizing to me. I don't know if you guys had anything else that was on your radar, but we can talk about gold, and then we'll head over and talk about whatever you guys have on your radar. Maybe look at some lower time frame stuff. Try one more time to see if the YouTube live stream is working. If not, then it just means it's one of those days, which it is working, just a different, the Thursday one is working, not this one. Okay. One of those days, guys. One of those days. It might be a short session. I'm a little bit out of it right now. Yeah, the YouTube is working. It's just the live stream that is set for Thursday is the one that went off, and not the one that is supposed to be for Wednesday. So, yeah, it happens. Anyway, let's go to gold. Let's break it down. Let me not spend too much time on my woes with you guys. Let me just do one thing real quick. Let me cancel the other live stream just for people that are watching here. I'm going to edit this and just say Wednesday. That'll make more sense. Give me a second here. Or she says markets are dry for her as well. Yes, welcome to summer trading. Welcome to summer trading. Now, again, dry. I mean, summer trading, as I mentioned, while everything was muted, summer trading is typically slow. Doesn't necessarily mean it's bad, though. A lot of people will say that the summer markets are bad markets, meaning when I think of bad, meaning that you can't make money, you can't make profit in the summer. Not the case. I've had some of my greatest months in the summer. It's just dry, it's slow, and some of the moves are far and few between. So it requires a little bit more discipline, a little bit more patience, a little bit more focus. Because when you get sucked in, if you can imagine, excuse me, you get sucked into nothing happening for days on end, you kind of fall asleep, you kind of rush through things, and then boom, the move that you're waiting for actually happens. and you miss it because you weren't prepared. So the best advice I can give you is stick to your routine. Oh yeah, crypto's had some nasty drops. But let's take a look at gold here. Let's take a look at gold on the hourly. Now, we were really close to another advanced pattern formation on gold. You see we had a nice cipher here to end the year on gold. That was one that we watched forever. It seemed like it never completed. And we're really close to another advanced pattern formation here. So I would check your data. We almost had a bat pattern forming. However, you can see that if we look at our B leg, right, we did touch the 618. And unfortunately, a 618 puts us on alert for a bat pattern a Gartley pattern and not a bat pattern. For a Gartley pattern, I require a secondary 618 Fibonacci retracement. We do not get that here. Therefore, is this going to be a valid pattern formation or not? It is not. But Akil, it's so close. Yes, but rules are rules. Now, there's nothing wrong with having a rule that says this close. We talked about kind of the flexibility of structure yesterday, how structure isn't ever a single price point. It is a zone. But if you're going to have a rule, if you're going to use close or close enough in your analysis, just make sure it's rules based. You're going to have to define what close enough is. So that doesn't interest me anymore. The thing that does interest me is the recent break and close below structure here. So you can see yesterday we put in a nice lower low, lower close below this low. And then today we started retracing back up, giving us the potential for a continuation to the bearish side. Again, once this little reversal point happens, previous structure support, we would look for this area to act as a level of resistance. So we go down to the 4 hour. This is going to follow up on yesterday's conversation, right? 4 hours, you can see the ebbs and flows that are happening. We go up, we go down, we go up, we go down, we go up, we go down. We're coming back up. Do you guys remember what we spoke about in Monday's Q&A session? Again, these are follow-ups, right? The job of the live room is we discuss something on Monday, we do a whole training lesson on it, and then we try to follow it up with real time and real life examples in the market so that you could actually turn it into practice. I had a good conversation and live roomers. I'm going to ask your advice on some stuff a little bit later about a few traders just asking. One was asking how to learn. The other one was asking, well, I guess they're both kind of asking, how do I not become overwhelmed? So I'm going to pick your mind on that so we can help that trader out some. We already did it on the chat yesterday, but I want to do it in the podcast. That way the rest of the world can hear it as well. But yeah, we've got hidden diversions, right? So the question is, where is our last pullback, right? I think we would all agree this is our last pullback. Maybe we don't all agree, but this is going to be our last pullback right here. This is going to be our current pullback. You can see that so far we are putting in higher or lower highs. Which one? We are putting in lower highs. Now, again, we go down to our indicator. We find our spot where our RSI, this is the relative strength index down here, guys. 7 period, for whoever has questions about it. I like a 7 period, not a 14. Personal preference, not better, not worse, just personal preference. This is the area of our previous pullback here on the RSI. And then our current pullback is still forming, but right here. Now you can notice on our pullbacks, do we have lower highs or higher highs? Orsi's already on top of it. Helen's typing in. We have higher highs. So again, a difference between what you see on price, slanting down, what you see on your indicator, slanting up. That is going to be divergence. And this specific type of divergence, this is a positive sign for a continuation trade. So again, doesn't mean that you take the trade right away. No, it doesn't, right? But it is a clue that you can add, right? As we are detectives and lawyers and private eyes looking to acquire clues from the market and build a case so that we can win our court battle. This is what we're doing here. We can add this to the fact that, hey, we're coming into previous structure, that we have hidden diversions, that you have maybe a specific candlestick formation happening. and we can look for opportunities or look for selling opportunities here. Now, we went a little bit out of order. Today, we didn't stick to the IPDE process like we usually do, but we have a directional bias right here. We want to get short previous structure support acting as resistance. Another question we want to ask ourselves is, okay, well, if we want to get short, where do we want to get short to? This is going to vary depending on your trading style, right? I'm going to delete my drawing tools here. Some of you, if you're like me, I'm not really a trend following trader, going to shoot for a retest of the lows right there. Some will be looking for an extension to the next area of lows. And of course, some of you will be looking for both. So let's ask ourselves the next question. If we're likely to continue lower, any ideas on where we're likely to continue lower to? Again, we can look left. Structure leaves clues. That's the beauty about the market, is that it gives us clues of the areas that are important. And again, if you are good and you practice the skill of measuring out these ebbs and flows, these areas can become pretty, they can jump out to you pretty well, right? So an area, the next area that I see, again, this white line where we're currently trading at, the next area that I see of importance is going to be right down here in this area. We can go back to the left, see where that's at. Maybe we draw out something else, maybe a Fibonacci extension. I'll zoom this in a second. Swing high to swing low. Maybe we have some confluence down there in the form of a 127. There we go, right in that area. Decent place to look for an extension too. So we ask ourselves, is there room to profit on this opportunity? Meaning that, is there room to go to the downside? If the answer is no, then you erase everything, move on to the next trade. If the answer is yes, right? Now the next part is simple. Again, stops are going to be pretty much simple the entire time. You typically have rules, or you should have rules for your stop loss, depending on what your entry reason ends up being. The targets are the one that require a little bit more analysis, in my opinion. And then even the entry point, which is interesting enough, right? Because the entry is typically, I did a poll the other day and I asked people, what do you struggle with the most in building a strategy or developing strategy, entry, stops, or targets? And entries and targets were basically 1 and 2. They were different depending on the poll I gave, but a lot of people struggle with the entry. And what's interesting is that I'm not saying the entry is easy. Entry is not easy by any means, but once you decide on the entry, it becomes the easiest part of your execution, right? Once you decide on how you want to enter, it's pretty easy because you probably have maybe only 1 or 2 ways. And you're consistently using those ways. It's kind of like a non-negotiable, like you know what it is. Excuse me. Like you know what you need. The hard part is, the analysis. Obviously, the hard part is probably the targets. If you're going to do the think like the other trader method that we spoke about yesterday, the entries are easy. You're like, hey, I got to wait for a doji candle, lower low, lower close, or I have to wait for a double top, or I just need a limit order. So you can see we're coming up to, again, our previous structure low right here, support acting as resistance, kind of the very beginning of that kill zone. Price action has put in 2 consecutive doji candles. We know that doji candles mean what? What is the story behind the doji? They mean indecision, right? So the market is thinking about it. The market is making up its mind. The market is battling. And if you're an aggressive trader, one of the aggressive entry types would be to look for a lower low, lower close candle, meaning that if this red candle breaks and closes below, that is a positive sign for the bears. And that can also be an entry sign into your trade. While we're down here, look at this cute little head and shoulders, by the way. So decent trading opportunity here on gold. Basically, very similar to what we looked at yesterday. Someone says on YouTube, video quality not good, sir. I apologize for that. You can come hop inside the live room. I can tell you that the video quality is a lot better in here versus the live stream. Or she said, is that also a double inside bar? It is currently, you're right, yeah. A double inside bar, probably a narrow range as well, Orsi. If we zoom in on these dojis real quick, we can see, yep, first one is definitely an inside bar. This green one, I should say, the one in the middle. And then, yeah, the current one is close, but yeah, that is an inside. Oh, no, maybe, I think the top may have tested it. But yeah, this one's definitely an inside bar. This one may have just spiked above it. But yeah, more sign of indecision, more sign of consolidation. Contraction leads to expansion. So decent trading opportunity on gold. Nice combo, yeah. Any questions on this? We did a long live stream yesterday, 40 minutes. Gave you guys some extra goodness. I'm glad you enjoyed it. You had some very good questions. Today's going to be a short one, though. But any questions here on gold before we kick the live streamers out? It's my favorite part, saying I'm kicking people out. Kicking you out. But you'll be let back in tomorrow. George says, I gotta say, Orsi is the reason why I have an eye for inside bars. Inside bars are interesting, yeah. Inside bars are interesting. The inside bar break strategy is one of the, or inside bars, I should say, are one of the few things that actually worked for me when I was in my really horrible, weird trading days. Now, I had all types of other problems, so it sabotaged it, of course. But yeah, I like an inside bar. All right, YouTube, TradingView, thank you for joining. Sorry about the mix-up in live streams. I think the Thursday one is going off on Wednesday, and it's been a rough morning. Dealing with tantrums 1 minute before the live room starts is a great way to get knocked out of your OODA loop, but still a rewarding good. Now it's good quality. There you go. That means it was on your end, not mine. Perfect. So I'll see you guys tomorrow, same time, same place. Hit that like button on your way out. Live room.